Hey, good morning, everybody. Hey, welcome to Thursday. It's been a rough week this week, and it looks like today is going to be more of the same. At least it's looking that way to start off the day. So I thought that today we'd probably start off with, the understanding market corrections, because that's a great report you need to have in your hands based on what we're really starting to see right now. So we got our free report, Understanding Market Corrections. Text market to 863-285-3815. Hey, the other thing I want to remind you folks today, we're having a lunch and learn and an after work and learn next Thursday. I think that's October 9th. You can call the office 382-0037 to get registered for that. So, or you can find the link right here on Facebook and register that way. So have a great day, and I look forward to speaking to Dave here in just a few minutes.
It's 8:39. Let's check in on your money. It's one of those days where I'd really rather not, because it's not a fun day on Wall Street yesterday. Let's go downtown to the offices of Statler Financial Services. Phillip Statler is standing by. Phillip, do you have did you paint a smile on your face this morning to sound cheery?
Hey, I'm trying. I am trying today to be as cheery as I can, based on what I'm seeing in the numbers. Tuesday and Wednesday were just dreadful days to start October.
Good gosh almighty. Yeah, we lost 3.5% of the Dow's market value in the first 2 days of the month. And while we're looking at a little bit of green, at least in my delayed quote right now, it's not going to come within 10 miles of getting much of it back. And so far, the economic news that we're getting this morning isn't going to help a whole lot either. Start the morning out with the first-time jobless claims before I set the table for yesterday. We showed 219,000 first-time jobless claims, which still is inordinately low, shows our economy is still supporting a good, solid employment number. But after yesterday, an increase of 4,000 unemployment claims is enough to just make the jitters add a little bit more, I got to assume.
Yeah, I'm thinking so, Dave. You're right. It's not a big differential. They expected 215,000 new job claims. It came in at 219,000, so 4,000 more than expected. Given we're basically at full employment, that to me is not a big deal. But you add that to all the other little things that we've been talking about, and it's just one more thing that's not going the right direction.
Absolutely. That's the thing. I mean, normally on a normal market day, we'd look at saying, no, 219,000. You get down that low, you're pretty much getting into statistical wobble between 19 and 15. But after yesterday, where we lost 494 points on the Dow, 123 on the NASDAQ, and 52 on the Standard & Poor's, it was a sell-off yesterday. Anything that isn't good news is going to be perceived as bad news, I assume.
I'm thinking you're absolutely right, Dave. It's it's going to be that kind of market this week that there's not going to be much give in terms of what people feel if they start seeing more and more bad numbers come in for the economy.
Absolutely. We got a bunch of other reports that are going to be coming out of the government right around 10 a.m., and they're going to follow up on that, which kind of explains the real modest changes that I'm seeing on the futures market this morning. The big one, I think it's around 10 anyway, that manufacturing index that came in the other day that scared the bejeebers out of everybody fell below the 50 number, and that indicates contraction in manufacturing. The bookend to it, I understand, the ISM service index is supposed to come out later on this morning, right?
Yes, sir. It's supposed to come out later today, and the big talk is that that's going to be a key number everybody is going to be paying attention to, because at this stage we've seen manufacturing decline and move into that contraction mode. If we see any kind of downward movement in the services index, I think that's going to push us even further down the scale.
At the very least, into more owly humor mode on Wall Street, that's for sure. Manufacturing, my instinct when I saw it, it'd go down. I didn't know what the number was. I got busy the other day, but when I saw it go down, I was kind of saying, GM strike. There are things going on that can affect the manufacturing sector, but boy, oh boy, if the service sector shows a decline as well, that's going to make a few investors just downright jump off the walls nervous.
It will. The other thing we have coming out sometime today is factory orders, and they're already anticipated to be down 0.3%. So if they come down any more than that, I would think that would be another issue that the traders aren't going to like.
Understood. We're expecting a durable goods report as well later on today. By and large, once again, to put everything in perspective, there's no indication that we're in a recession yet, but it's definitely an indication of the economy slowing down, which is kind of the song you and I have been singing now for over a year, right?
That's right. We've been talking about this bull market is, now in probably getting close to almost its 11th year, not quite, but getting close. And so it's historic, and we know that business cycles are go through a cycle, and at some point we will hit a contraction cycle within that business cycle, and that's going to be a recession.
And the kicker to it is going to be how well the Fed and the administration manage it in Washington, whether it's going to be a painful one or whether it's going to be that soft landing I keep using the term for. That, I think, comes out of the Reagan administration's terminology. But bottom line is, it's something that can be managed, but it is inevitable that the economy slows down. It's called the business cycle.
That's right. I mean, and that's a natural cycle, and it's not a cycle that anybody controls. It's just controlled by the ebb and flow of supply and demand, and so we'll just see how that plays out and when that actually starts to happen. I mean, I think we're seeing maybe a little bit of the slowdown now, and so it just tells you that people need to be prepared, especially folks that are 5 years out or less from retirement, or are already retired. I mean, those folks can't handle another 08.
Absolutely. And a good lesson can be taken from the guys that throw real big gobs of money around. They're hedging their bets. Their tool for that is get out of equities for a few days and get into bonds, and that's showing out because the 10-year Treasury bond now down by 6 basis points this morning already from yesterday's close. And that's what the big money boys do. They just go where the money will get them absolutely nothing for a few days until things settle down. They're doing that, which kind of gives a valuable lesson for those of us with much more modest portfolios, right?
Yeah, it does. That's an indication of flight to safety. And so I think that is probably, given the last 2 days, that we'll continue to see that flight to safety until we get some better news on the economy.
Understood. You had a little bit of company news tidbits, among other things. Something, again, we can't do Merry Sunshine. Kroger released some information that isn't going to be good news for their stockholders, right?
They did. So you got Kroger is supposedly going to be laying off hundreds of workers here in the near future. And so, that's kind of an indication of a slowdown. And so we'll keep an eye on them. You got the strike, General Motors. That's a cause and effect deal there. But there are other companies that we've talked about that are going through that layoff mode.
Understood. I know we're supposed to be getting a layoff report. What do they call it? I don't remember what it's called, but there's a layoff report that's due out sometime this week as well. And then, of course, tomorrow we get the first unemployment, the unemployment official number out of the federal government as well. So employment is going to be a lot of market-driving news this week so far.
It is. We do. We got some good news. I knew what you were going to ask me.
I was going to ask you something good.
So we do have some good news. Pepsi reported, and Pepsi had a great quarter. They beat by 6 cents. Revenue beat the street. They're seeing about a 4.3% of organic revenue growth, which is a good sign when a company has that type of growth coming in. They're trading up about 2.2% this morning after falling about 2.5% yesterday. So they're almost back up to actually, they will be more than back up to where they closed yesterday. So that's a good thing.
That's interesting. Is that the end of the last earnings season or the beginning of the new one?
Yeah, really.
That's a real straggler from them, and the real earnings season reports aren't coming out much yet, so I'm kind of surprised. Any other company news?
We're getting a couple more because we got Constellation Brands, the liquor distributor producer. They reported about 12 cents more than expected on earnings per share. Now, the one thing about Constellation is they they made an investment into Canopy Growth. And so if you take that out of the factor, their adjusted profit would have been $2.91, actually about 20 cents more than what it came out. So the Canopy Growth is causing a little stress on their financials right now. Revenue came in as forecasted. And so we look, and they're trading down this morning about 2 3/4%.
I was going to say they're showing on my loser list this morning, but you're giving me relatively good news saying that we're selling soda pop and booze just fine right now.
Yeah. So, but I think it's that constellation, it's that investment in Canopy Growth that is maybe somewhat questionable.
Understood. And you look at it at first blush, things don't look as good as they expected. I understand. Any other indications? So
another one, Popular Place, Bed Bath & Beyond. The 3Bs, they had beat by 7 cents a share. Revenue, though, was below the forecast. And same store growth sales was down more than expected. The other thing that I saw about them yesterday in a headline is they anticipate closing between now and the end of the year about 60 stores. So that's another indication of some slowdown. And again, it's the e-commerce versus the box stores. They're trading down this morning a little over 5%.
Ouch. Yeah, that's a business sector that the mail orders, the Amazons and the like do pretty well in. So there's a little bit of a challenge on the brick and mortar in that sector, I assume.
Exactly. So the other one I want to mention, I don't have the exact numbers, and maybe they just were updating their information, but they're probably on your big losers list this morning, and that's GoPro. Yeah, GoPro announced that they are seeing a real slowdown in their marketplace. They had to move one of the releases of their new version, Hero version 8 Black camera. Didn't come out in the third quarter as anticipated. It's going to come out in the fourth quarter, so that's moving some revenue from one quarter to the other. They're getting beat up really pretty bad this morning. They're down 17%.
Yeah, that would end up doing it if there's a risk that they might not make Christmas deliveries, and that would be the implication for investors, right?
Yeah, I think so.
You're resetting the table this morning for yesterday. I'll give you percentages. The Dow was off 1.86% yesterday. NASDAQ off 1.56%. Standard & Poor's 1.79% down. Overall, it was just a basic crap hole a day. Please tell me we got some good news this morning, 45 minutes early, Phillip.
Dave, I'm not going to call it good news. It's green. But most everything by less than 0.2%. So it could open still to the downside. Right now we've got the Dow up like $24. The S&P 500 is up 3.8. The NASDAQ's down 13 or up 13 and a quarter. So we're seeing upward movement, but just not by much. We're seeing the VIX down a little bit. And then we've got, the good old silver and gold and that kind of stuff is trading up down just a little bit. I'm sorry, I had to get to the right screen here. Not by much, though. Gold's down by about 0.1%. Silver's down by 0.7%. And then crude oil, it's down 0.25% right now to $52.51 a barrel. But that's, I think, about $2 less than what it was yesterday when we talked.
Yeah, that's downright precipitous, and I'm assuming that reason is as much as anything anticipation of slowing demand, which is not a reason we want to see the price of crude oil go down.
You're right, and I haven't seen exactly what's causing it to go down, but that's really a pretty significant drop over the last probably 30 days.
Absolutely. Overseas markets, Asia was mixed overnight. Japan was off considerably. The Hong Kong market's up. Europe responding to our crummy day yesterday. Everybody is going down and going down pretty fast this morning over in Europe. Phillip, this is the time for advice to stabilize and make a retirement fund something you can count on. How do I do that with some help from Statler Financial?
Devin, give us a call at 382-0037 to get a second opinion on their portfolio to make sure they don't have too much risk. We've got a free report on understanding market corrections. I thought that might be appropriate today, given where we've been. All they have to do is text the word market to 863-285 3815. And then let me remind you about our Lunch and Learn and After Work and Learn next Thursday. Call our office, 382-0037, to get registered for that event. And then catch us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
All righty. Get back here tomorrow morning, and we're hoping we're both going to have some good news for them tomorrow, right?
It'd be nice for a change.
Yeah, it sure would. Being able to smile a little more in the morning would be kind of nice. Phillip, thank you. You have a good day, and we'll catch you then.
All right, man. Thanks.
Thank you. Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done your...
Well, I hope we didn't bum you out too bad today, but I do want to remind you about the free report on understanding market corrections. I thought it was very fitting for where we are right now. All you have to do is text the word market to 863-285-3815. Here on Facebook, you can click the link right above this post. And then don't forget, we've got our Lunch and Learn and After Work and Learn coming up Thursday. I believe that's October 10th. Noon for the Lunch and Learn, 6 o'clock for the After Work and Learn. Call the office to register. That's 382-0037. Hope you have a great day. I look forward to speaking to you again tomorrow.